What's up guys, Nick here, back with another video. Since the first time I saw it, I've always considered the concept of the Square card reader to be fascinating. Farmers markets in the middle of a parking lot can plug a card reader into a smartphone and can accept credit card payments with ease. Over the past couple of years, I've noticed more and more small restaurants and coffee shops I've visited have adopted the ultra-modern looking Square payment system as their main cash register. With all of this growth, I thought I would take a look at Square's overall business. What exactly do they do besides sell swipe readers? How well is the company performing, and would Square stock be a good investment? Square is a company that was founded by Twitter CEO Jack Dorsey in 2009. His goal was to create a way to help small businesses and entrepreneurs process credit card transactions. Because of the rising popularity of smartphones, he figured there must be a way to use the small computer with internet access as a payment processor. He ended up building a credit card swipe reader that would plug into the headphone jack of an iPhone. Customers could swipe their cards and then choose to email themselves the receipt. For small businesses that operate without much infrastructure, this is a game changer. Think about businesses like food trucks, independent handymen, who now have easy access to credit card payment processing hardware and software. So while they just started with a small swipe reader that plugs into a headphone jack, Square now has a full cash register system that can do a lot more to help manage a business. Businesses can track their inventory, sales, and gain further insights into their real-time sales data. They make the Square app really intuitive and easy to use, and the cash registers themselves aren't very complicated to set up. Square charges a transaction fee for each payment processed through their system. It slightly varies based off what exact setup you use, but the standard processing fee is 2.6% per transaction plus 10 cents. These are for credit and debit card transactions only though. Square's target audience is small businesses. About 17% of Square's customers are restaurants and retail stores. Without getting too much into the actual payment processing details, one of the significant benefits to using Square, Stripe, or PayPal versus a traditional merchant account with a bank is that Square, Stripe, and PayPal act as the merchant for you. This makes the signing process pretty quick because now you don't have to deal with the approval process required with a normal bank. Now this would seem to create some risk for Square since there isn't a very extensive vetting process for the businesses that sign up to use their services. What payment aggregators like Square, Stripe, and PayPal do is they spread out the risk by signing up so many merchants that they're able to offset the risk from individual chargebacks and fraud. Square also is able to freeze the account if there is any suspicious activity detected. Beyond the payment processing business, Square also provides short-term business loans of only a few $1,000s through Square Capital. The CFO said that Square Capital is competing with friends and family, not big banks in this segment. Usually these are loans that are too small for traditional banks. Square has a huge advantage with its users because it has all of the sales data, so they can tell what businesses would realistically be able to pay back. They charge a set fee for each loan so the borrower knows upfront what the loan will cost. Square allows merchants to pay back through a percentage of each transaction processed in their system, as long as they meet the monthly minimum. Square also owns an app called the Cash App. With the Cash App, you can deposit money into the app and then send money to other users. Cash App also offers a physical card that you can use to make payments like any debit or credit card. It offers some pretty good discounts with different merchants when you make purchases on the card. The Cash App charges 2.75% when customers make purchases at businesses through the Cash App. The app also has an investing section where you can use your Cash App balance to invest in stocks and Bitcoin. Square charges for transactions on their Bitcoin exchange. The fees for Bitcoin exchanges are somewhere between 1 and 4%. So let's take a look at the actual business performance. So the revenue versus net income shows very consistent high revenue growth. But so far, this isn't a very super profitable business. They've only started to show profitability in the past couple of years, and if we take a look at revenue growth percentage each year, we can see that they pretty much remained over at least 30% growth, staying mostly around 40% growth. Comparing the end of 2019 to their revenue over the last 12 months, we actually see 60% growth. But take this jump with a huge grain of salt. I found something really interesting when I looked at their gross profit. Gross profit is the revenue minus the direct costs to produce the goods or provide the service. We can see that they've shown steady growing gross profit along with the revenue. But if you look at the line on the chart, that's their gross profit margin. We can see that even though they had 60% revenue growth between 2019 and the 2020 trailing 12 months, the gross profit didn't increase anywhere near near as much. When we look at gross profit growth by percentage each year, we can see very good growth numbers, but a steady decline. This means that each dollar they've added in revenue has cost a little more than the last to produce. Now let's take a look at the business segment performance so we can get a clear picture of what's actually going on. So if we look at all 4 segments at the same scale, we can quickly see that the transaction segment has provided the majority of the revenue over the past 4 years, but the margins are so big in the subscription and services segment that they make a pretty similar profit. What's also pretty clear here is why we see such a huge revenue jump but a big decrease in the overall gross profit margins. Bitcoin provided 2.5 billion more in revenue than the previous year, but right now the fees they're charging are breaking even with the cost to produce the service. Keep in mind that those are the costs before the administrative, the marketing, interest, and tax expenses. The hardware business is the smallest segment with only about 1 to 2% of their revenue. It looks like what they're doing is they're selling their cash registers and all their other card reading products at the production cost, so they can get you into the transactions and revenue and subscription ecosystems. I wonder if this is also the long-term plan with the Cash App, to try to find a way to monetize the app through advanced data or some other paid service yet to be determined. Now the balance sheet looks very good for Square. They showed $8 billion in assets compared to $6 billion in liabilities, which gives us $2 billion in equity. They reported $1.7 billion in debt, so their debt is only about 85% of their equity. This is a very healthy position. They also reported $2 billion in cash, so they actually have more on-hand cash than their debt. Okay, so what's Square's business actually worth? But before I do that, if you haven't already, please take a second to scroll down and hit the like button. I spend a lot of time researching these companies to make videos so that you can make informed decisions about what you're buying stock in. If you could pay me back with a quick thumbs up, I would really appreciate it. Now I think the best representation for Square's growth is to look at their gross profit growth. Now I see a big drop off between the 2019 and the 2020 trailing 12 months. I think part of this has to do with all of the pain that restaurants and small retailers have felt during COVID. As the amount of transactions are reduced from these businesses, Square brings in less transaction revenue. As things return to normal though, these numbers should come back up. I'm going to use a growth rate of 35%. This comes out to a fair PE value of 188. If we look back at the 2020 trailing 12 months earnings per share, they made about 46 cents per share. This comes out to a valuation of $86 per share, or 60% below the current share price. Looking forward to the next year, 2021, they're forecasted to earn $1.12. This brings the 2021 forecasted valuation up to $210 per share. This is just slightly lower than the current share price by about 3%. Now, one thing I haven't talked about much on this channel is what I call the 5-year upside. I basically take the next year's earnings per share forecast, apply the forecasted growth rate for 4 more years, and then multiply it by the fair PE value to get the 5-year price target. Keep in mind that the farther you project out into the future, the less accurate you're going to be. Where I really think this is useful is deciding if there is enough upside to hold over the next couple of years. If there is, you may consider paying slightly above the current forward valuation. Square comes out to a 5-year price target of $700. This would be 223% above the current share price. The S&P 500 at 7.5% average growth with the same forecast comes out to 43% upside. So this means that there would be a lot of long-term growth to be had in Square, but take this number with a grain of salt because things can dramatically change over 5 years. I really pay more attention to this number for selling, but I do think it's worth considering if you're thinking about buying a stock. So right now, I would say that Square is currently fairly valued. If you bought right now, I think you're getting a fair price for the stock. I do think that just because of the 35% annual growth rate for this company, that might make it completely worth buying at the current price, since the share price would continue to grow close to the forecasted growth rate. This is all, of course, with a long-term buy and hold strategy in mind. But either way, I hope this video has given you enough information to give you an informed decision about what you want to do with Square stock. Now, I don't own any shares of Square, and I don't plan to buy any right now. I do like the business overall, and I would definitely buy at the right price. I'm personally looking for more of a pullback before I decided to buy. This company has incredible growth and a healthy balance sheet, so I do expect it to do very well going forward. Now, if you found this video helpful and you want to see more, make sure you hit the subscribe button and hit the bell notification so you know whenever I upload a new video. And as always, thanks for watching.